PNI, interest only, PNI investment loan, this loan, that loan. How confusing can a mortgage be? So I remember when I first time buying an investment property, the amount of paperwork, it's all look like blah. It's so confusing because there's a lot of different options out there. So I'm gonna tell you from my personal experience and which product that I actually choose when it comes to choosing your home loan. This is based on my knowledge and my interpretation and my experience only. So your circumstances might be a bit different compared to mine. So take that into an account as well. So when you're buying an investment property, unless you're buying it in cash, you're bound to actually get a mortgage somehow. From a bank or from a lender, financial institution or so. So one of the most confusing thing would be, the main part would be the following thing, yeah? Would it be principal and interest repayment or interest only repayment? Now those two alone, it's going to be a bit different between one lender to another lender, and the interest rate that you're actually getting is a little bit different. So for investment property, like most people actually said, oh yeah, just pay interest only because it's an investment property and you can get tax deductible and all that jazz, all the fancy taxable side of it. I look at it from a cash flow point of view. So if it makes sense and if it's still making money, then do whatever it is that you need to do. So I choose on my investment property, I choose principal and interest repayment. I was paying interest only, but I actually changed that into principal and interest repayment. Purely in the sense of, I'm gonna hold this in the long haul. I'm gonna hold this in a long time, and I want to pay off the debt as soon as possible, so that way I can acquire the property a lot more quicker. That's the reason why I choose principal and interest repayment. Now, and on top of that, should you choose fixed rate or variable rate? I choose fixed rate because it works out to be that you're actually saving a lot more money when you fix it at a certain number of years. Every bank or every lender has a different, interest rate depending on which options you're going to choose. I know investment loan, it's actually going to be a lot more expensive than principal place of resident type of loan as well. So bear in mind on that. So work out what is the numbers, work out your visibility on how much percentage you're paying and what is the interest rate going to be and what your exit strategy going to be. So my exit strategy is I want to pay off that loan as quickly as possible, so I choose principal and interest. There are some people out there that I've talked to recently where some people got caught out after interest only loan. It's great in the sense of that you're hoping that tomorrow price is actually going to go higher than what you paid for, hence why that's what you're banking in, I guess, in a sense. And you're not paying off any of the principal at all, so you're just paying the interest component of it. Just like a credit card, I guess, in a sense, if you pay the interest only component, at least you make the payment the minimum amount, but you're still able to hold on the property. I guess if I was a lender, I would rather have, if I was at the bank, let's say, I would rather have my customer paying interest only loan because they never pay off the principal alone. But on the other hand, I don't want that. I want at least a certain percentage, at least a small amount of it goes towards the principal of the house. In the beginning, it doesn't look a lot. In the beginning, it's probably a couple of bucks here and there, $50 or $100. But throughout time, depending on your strategy, my strategy is holding it as long as I can, pay it off as quickly as I can, and so that way I take ownership of the property, not the bank. Now, if it makes sense to you, then this is, I guess, what I did. Yeah, I put down a 5% deposit. Now 5% deposit, I guess, is one of the smallest deposit when you're acquiring on a property, when you're acquiring on an investment property. But at the same time, I was able to hold I was able to get a few properties at the same time. So it's 5% deposit. Yes, there's a lender's mortgage insurance in there. It's inbuilt on the repayment. But I wasn't really concerned because I know my buyer, or my tenant buyer, or my buyer, call it the person that is taking over my mortgage, is paying me a lot more than 5%. It's paying me, I guess, a lot more in terms of cash flow wise. So because of that, I wasn't really concerned at it now. But if I were to do just a normal rental market, typical rental goes for about 1 year, 12 months or so. Then they either stay or they're going to go and then they redo another lease or so for 12 months. Where I am, I guess, in a contract with the lender that I'm going to pay off their loan. I'm going to pay off my mortgage, let's say, to borrow that money to buy the property within about 30 years or less. Now, it'd be great if I have the same tenant for the next 30 years. But there is that option, so I actually chose that. I had a tenant that is going to be with me for the duration of 30 years. Fancy that. Or I call it tenant buyer because they're buying the property, and I'll give them the options to buy the property at the end of the 30 years, let's say, or between now to 30 years. But because of that, they're paying a premium, and on top of that, they know how much money is coming out. So I'd rather have a tenant buyer instead of your regular tenant. One, they take care of the property a lot more because they're actually buying the property, and they're taking care of the whole entire expenses on the property instead of me paying for the water, strata, council. The person that is actually staying in my property now, they're taking care of all of those expenses, and they're providing me a better return on my money, let's say. So I'll give you an example of it. Would be, I bought the property at about 300,000. I sold it for 500,000. So technically speaking, I should be getting about $200,000 in cash. But because I'm selling it a certain way, or having my property being managed a certain way, I actually able to gain, what is that? Like that 200,000 is gonna go 400,000, but over the span of 30 years. So that's how I did it. So my strategy is probably a little bit different than yours, but please be mindful though, this is based on my personal experience. Your experience will be a little bit different than mine. So I guess there's only a small number of people out there that is somewhat doing what I'm doing, where my tenant is looking after all of the expenses on the property, and instead of them paying a normal rental, they're actually paying a similar like a mortgage repayment. So I bought mine at 300, they bought it from me at 500. My repayment to the bank's roughly about $300 a week, $350 a week, somewhere thereabout. But their repayment to me is roughly about $700. So hence why I like a fixed amount, fixed interest rate for a certain number of years, because I know I'll be getting $700 a week from my tenant buyer, let's say, and I know my expense is going to be $300 a week for my mortgage repayment. So I'm hoping that makes sense why I chose principal and interest, number one, because they're paying principal and interest, I'm paying principal and interest, and then they're paying on a 30-year mortgage, where I'm only paying roughly about 25 years mortgage. So I'm going to pay off a lot more quicker than them. However, at the same time, they got into the market right now. So hopefully this makes sense. Like, why should, like, you only do principal and interest, or you only go to an investment if it does make sense, if it's making you money. If you're hoping that it's going to make money, you're based on hope. And the hope, I don't like working on hope. I like to know my certainties. So with this instance, for example, I am certainly that I'm going to get X amount of dollars every week. Now that's where I make one of my passive income, let's say. $300 out, $700 in. So what's that? That's about $400 per on that one property alone. And yeah, so they fixed the rate with me, and I'm fixing the rate to the bank. I'm literally in the middle of the transaction, and instead of me getting my profit all in one hit, I'll be receiving them over the lifespan of 30 years, somewhere around there, unless they choose to actually to sell the property beforehand, which I'm hoping they don't. But if they do, obviously I can't really stop that, but at the same time, I lose my cash flow from it. Like I mentioned beforehand, cash flow is king, and I found a system to create it in a way that it will be, one, benefits from the buyer, benefits me, benefits for everyone. Everyone wins in this scenario. So, anyway, hopefully this is really helpful if you're thinking of looking at a loan where is it principal and interest, or interest only, is it fixed rate, or is it variable, 5%, 10% or 20% deposit down. So hopefully that helps. This is based on my experience and my take on it. Talk to you guys later. Hope you guys enjoyed this video. Peace out.